Good morning and welcome to the early bird, and here we're looking at the S&P 500 on a 4-hour chart and just looking at the bigger picture here, and this is where we'd be looking at this little area in here just above the 1200 area here. So we're looking at a 5-wave structure coming down, so we're basically in the sort of third wave at the moment. One of the important aspects here, though, is that we are under the 1300 here, which was the support. So clicked in the bearish view of it all. And yeah, well, as you can see, it's moving down, and we'll be looking for 5 waves to move that down. So fair way to come down. So we just need to line this up with this particular move up, line this up with the other indices and the other drivers, and Forex as well. So looking at the Dow Jones on a 30-minute chart here, we were looking for, we could see that this move down through here was starting to slow down through here. So we're expecting a bounce off here, and also considering it oversold for the short term, but medium term the pressure's still to the downside. So off the 12,100 here, we were looking for a bounce off that, a wave 2, but as you can see, overnight on the sort of close here, it's been sold off, and the same as the index as well. The Fed's never hinted at more stimulus, ending because the second QE2 ends closer to the end of this month here, so there's no hint of any of that coming on board there. But for us, that was the rally that we're looking for. Now, we understand that these are minor levels through here, like 12,100, 200 and 300. So we know that there's going to be choppy price action through here, and that will continue into the 12,000 as well. The 12,000 is not a strong number, but it's part of a supporting historical area from 12,000 to 12,300. Once or if the price finds this as resistance here, then there's not a lot holding it up. The 11.8 has got a fair bit of strength in it, but would be looking at the 11.5 after that, which would be the medium level. Yeah, as this market here deals with this 12,000 here, then our local market, the ASX 200 and the SPY, would be working through the 4,500, 500 being a minor level in this case, but we'll see those work together there. So look, we can still looking for, some sort of bounce here, but there is a lot of pressure to the downside, as you can see. Okay, on the 5-minute chart here, this is what we were looking at through here. Yeah, so 12,100 here. What we'll be looking at now is to see if the 12,100 becomes the resistance through here. So that's what we'll be looking at here. Any sort of move back on here as support, then we would have to consider that this wave 2 bounce here is not complete yet, and would be looking for this to have an A and a B and a C wave back up to here for this wave 2 here. So it's not all done and dusted. The price hasn't rejected the 12,100 yet, and that's an important sort of point when we're looking at our local market. Whereas just wanted to have a look at the FTSE here for a moment, and we're following this particular wave count coming down into 5 waves to this point here, and then we were considering watching this as an A and a B and a C coming through here for the A wave, and then a little ABC for the B wave here, and then a C wave up for here. Now, we could consider this ABC finish, this A to here, B to here, and C finish to here, so we can start looking at wave 1 coming down through here now, and a stronger move coming down through here. The only mistake that I could have made here in terms of this is that this C wave here is moving up for wave 1, and an A and a B and a C back for wave 2 here, and then we move up for wave 3 here. So we could say that once this market moves down much lower into here, the 61.8 retracement level from this point here to this point here, coming down and breaking here. So under the 5830 here, we can start to consider this moving through here. But obviously, the safer trade is finding the 5.8 as resistance here. But if we do come down through here, we'll have a bounce off here. We'll be coming back up here anyway, so we'll look to short from those points there. Any short trades at the moment through here would have to keep the stop above the 80 here and the 72 in this sort of area here, if not above this last high here. But keep position sizing small, and the idea would that be if we are correct here, then we can add just simply adding to particular numbers levels on the way down through here, and not worrying too much about navigation, just really trading the price and the trend as such. The SPY here that we're looking at here, I was kind of lining this up with the FTSE situation. So we'll have a look at this as the FTSE pattern, and also the Dow Jones as well. So in terms of the FTSE, we'd be looking at this as a fourth wave up here, and then the 5-wave structure coming down through here for wave 5. We'd be looking at this as a wave to here, a B wave to here, a C wave to here, finishing here, and then we'll be looking at this down for 1, back for 2, down for 3, 4, and 5. Moving to the downside, so that's a real possibility to there. However, looking at it in sort of the US terms of view, that instead of looking at this as a C wave up here, we'd be looking at this as an A wave coming up here, because that's in basically in 5 waves: the 1, the 2, the 3, the 4, to 4 to here, and the 5 to here. So this would be the pullback through here. So we could say that any support found on the 72 and then the 80 here you could use to scale in, and what we'd be looking for would be an ABC to the upside in terms of a little A wave to here, a little B wave into here, and a C wave up through to here. Not that it'll come up to this distance here. It's more likely to come into this space here if that was going to be the case. So that 3-wave counter trend that we were looking at. Now, in terms of proving things bearish, then this move under here, in roughly this sort of square area here, the midpoint here, the 50, a move under that, and there'd be a bearish picture there. But that doesn't make it any easier as well, because having a bearish picture here, you know that the 30, the 20, and the 10 here would all be it would be a bumpy ride, and coming into the 4-5 would see a bounce as well. So it's not going to be sort of easy in this area as well here. So I would sort of, depending if you're scalping or you're position trading. If you're position trading, then it's really a matter of selling into the rallies. So selling it either into in here at resistance here, and also once the market comes down to 4-5 here, has a bounce back up here to test resistance and supply levels through here, would be the best place to short it from this point here. So I move down through here, I move back up into supply area, it may even be to here, but shorting in this area here after this particular price action happens here. If this does move up through here, then we can look to short that there as well, because it's likely that we'll see the drivers, crude and so forth, be pushing to the upside as well. So if we have a look at crude first here, yes, it has a bearish count, but I've just adjusted it slightly here for still the same wave 1 down through here, but an A wave to here, a B wave to here, and we're looking for 5 waves up to make wave 2 here, to make wave C, 5 waves to make C of 2 here. So we'll be looking for 1, 2, 3, 4 in across the 100 here, and then a 5 wave up to here, looking at a flat correction within this space here and then unfolding down to this side here. So essentially we were expecting a bounce in across the markets and the indices more so. Of course the drivers for those would be these sorts of things like crude and copper and gold and so forth. So they are sort of pushing to the upside a little bit. So we'll see this this sort of strong move play out through here, but this is a retest of the 100 and also a retest of supply as well, sellers retesting the strength of those sellers there. And also in the crude market as well, the copper market here, we were looking for 5 waves down through here and then an A and a B and a C wave, calling a high in at this point here, and then looking at this market moving further down through here. But as you can see, it really wants to push back up through here, so we need to run with that. If the 415 here becomes support here, and that's likely because look at it, this move down here looks more corrective than an impulse wave down. And what I mean by that is that it looks more like an A wave and a B wave and a C wave down to here. Sure, that might be a 4 and a 5 here, but it's cutting it a little bit thin. But let's see how we go. Bottom line is that we could say that while the market is above 410 here, then the base metals are positive. And we did see BHP up last night, even though the Dow was down. So BHP being up is supportive for our market, and it's just a showing of base metals and resources as such. So support on the 415 here would add to that, and then we would see a new high above here, and we'll reassess the situation at that time there. But above 410 positive, below weak, above the 415 as support positive, and so forth. So we'll run with the levels because they draw the line in the sand of being long or short, and they also help us manage the money. So we'll see that this is a positive light until this is broken. And yeah, and also the gold as well. The gold, we were looking at, squash this up a little bit, we were looking for 5 waves up in terms of 1, 2, 3, 4 and 5 as a possible C wave and a top, and that's fine, but we just needed evidence of it moving down. And yes, we did get this and we did get that, and we thought that's fine. We did get this, but this moving back up through here now really makes this a clear A, B and C, a 3-wave corrective pattern, a bullish corrective pattern. So at this stage here, we could assume that new highs would be made above this high here. Of course, it's going to struggle with these old highs here, so you'll need to be aware of that situation there. So plenty of resistance in this area here, but also this is a normal course for trading price, the levels. So market comes up, reacts, comes back, has a 3-wave correction, and then continues to make an effort to push up through there. So any long trades here will be looking at support above the 1550 there, and further highs to be made there. Of course, a move under, say, the 1540 here would be a breach of that. So essentially looking at this point here to this point here and looking back as a 61.8 retracement level, or we could say sort of 72 and 80 below the 80 retracement level there, then it's pretty much doomed. So it's better to work with the levels at that stage. We could say that below 1540 that we'll be seeing more downside, but as it stands, this particular pattern here is suggesting that we'll see further upside through this, so a larger trend to the upside in the gold, which is good. So any rallies we see in indices, we can head towards the gold market, and we'll also be seeing currencies push up a little bit further. So when we have a look at the FX here, we'll start with the Australian dollar because we're talking about gold for a moment there. As you know, we were looking for an A and a B and a C wave coming up through here. This particular C wave that I was looking up through here was pretty rough. So we've pretty much called this a corrective move, a larger corrective move through here, which offers it a nice base and support on the 107 here. Supports, as we were looking at here yesterday, was down in the subgroup 2 area here. So based on this sort of corrective move through here, we could expect to see further upside here, as we were always originally thinking of as well. We just might see it move up a little bit further than that. So any support on the 107.30 would take us to the midpoint and so forth all the way up there. But this is going to be a strong resistance. We always know that the 107.72, that when you get 772 together, or 272, say the Nasdaq is at 2720, you'll see that as a resistance point in the Nasdaq. So it really locks things in at that point there. So 272 or 772 really plays heavy with support and resistance, and this would be at least 95% of the time, so it's worth using and noting. Okay, now the euro here, I'll just have a look back here. You can see on the 2-minute chart on the Australian dollar here that this is a nice big correction here, okay? So any support on the midpoint here, the 30 here, the 107.30, once support is found on top of group 1, sitting on top of group 1, then we've got a chance to get up higher. So we've had the correction, right? Now we've got support here. If we get support on the 30, then trade it long. So, and we'll trade it up to the 108. But there will be problems through all of these levels through here. So just be aware of that. The euro here, it's a little bit tricky now because we were looking for 5 waves up, and those 5 waves are pretty much now in place. So what I mean by that is from this low down here, say the 143 here, then we're looking for wave 1, wave 2, wave 3, wave 4, and now we're looking for wave 5. So in this wave 5 here, we're kind of looking towards top of this is also important here. The 147 is going to be resistance. However, the 14772 and the 148 are the main resistance areas in here. If the market finds support on the 147, and also in this particular case here, this other number here is important as well, the 14720 here, another 72 number. If that finds support, then you can look towards these numbers up through here, but expect havoc through here. So try not to lose money in this little area here. We looked at this run here yesterday, looking at this as a wave 4 here and looking for a push up through here. So the idea was to add above this level here once it had support there. So that was the go. So in looking at looking for 5 waves up now. So really this is kind of it here. That's 1 and that's 2. That's pretty simple, isn't it? So this would be 3 to here, or it would be 3 to here, okay? So one way or another, wave 4 would be here or here, and this would be wave 5 here. So it's coming close to an ending situation. So there's going to be weakness here. So just be aware of that. And we could say that this was the resistance area. Now we could say that's the support. So we're dealing with a little group 2 in here, the 65, the 72, and the 80. So we could say that really if the price finds the 72 as resistance, then you can use that to scale in. Also adding at the 65 as that becomes resistance, and then chill out once the 50, the midpoint here, finds resistance, finds finds that as resistance, then you can add onto under there if that's going to be the long-term thing. So essentially it's just using the levels to trade with. If you're coming down through here, take the money here, wait for the bounce, wait for it to go through, wait for it to come back up, retest it. If it fails, then add to the position. You'll be moving to the downside. Very much like this just here. This is pretty much a classic case. You trade up to the midpoint, take the money, wait for it to shoot up, if it reacts, finds support, moves up, hits the next level, the 65, comes back, checks it for support, comes up and checks it in here. So I know it's not easy at sometimes, but it's that process here. It was resistance, makes an effort to go through, comes back and checks it, get in, take profit at these levels. That's the go. If the 80 becomes, I would normally take all the money at the 72 and then I'd wait for it. If 72 became support, that's the first thing I'd be looking for. May add there, then I would be looking to add on the 80 here. And if it doesn't occur, then it doesn't occur. So it's not about sort of guessing which way the market's going to go. It's about acknowledging and recognizing support and resistance, and then handling how you handle the money is where you make the money and how you make the money. Okay, so that's fine. So even though we're just looking for a bit of a top in the euro here, it does sort of appear to me that the US dollar index has got further to go down in its wave count. So it's humming along nicely down through here. Yesterday we were looking at a retest of 74 there as a fourth wave and likely to fail there. Euro is doing the exact opposite and moving down through here. I've labelled this as it is here, but you know I think that I think this is more the one here, and the 2 here, the 3 here, the 4 here, and the 5 coming down here. So it still leaves this move here, 1 down to here, back to 2 to here. So this is all the third wave here. So a fourth and a fifth. So I still think there's more to come down here. So I think that the euro could push higher into the 14772, 148 area there. But one step at a time, one level at a time, and let's see how the market handles the 147 and what evidence it leaves us in terms of pattern and structures within all of that. Alrighty, well that's about it. So yeah, main trend is down in the indices, and we just as we came into here on our local market, we're looking for a bounce. We're getting that bounce. It's been a slow process from early June, so it's still in that process. It still can go higher. So that's what we're sort of looking at, and in a way it matters and it doesn't, because if I mean the 4,500 for us is our support. We can see that it's got support here because it never came down to it, So we know there's support there. We know that it's going to be bouncy and a bit rough. We're just trying to sort of split hairs and work out what type of navigation, how to navigate through the corrective process. We're doing our best, but it's not something that we can, get perfect every time. But just be aware that there is support down here. The short term is oversold. We are expecting some sort of rally. Will we get it from here? Will we get it from here? We don't expect it to go, too far to the upside, but we need to be cautious and trade less money and smaller position sizes until we've got the bounce and we've nailed it. We know exactly where it is, and the structure is more complete and more clearer, and we can short sell from that particular rally either higher, or we will be dealing with the market at a lower price, but with the 4,500 as resistance. So we'll either get it here, or we'll get it further up in here. We just don't know, and it's just a time and a place that we need to be cautious and trade less money, or just observe it, or look at the bigger picture and use the weekly and the monthly robo to the downside. Alrighty, well, good morning and good luck.